Welcome to Module 7, and this is one of the most important and exciting modules where we discuss profit taking. So, this is actually critical. This is where I missed the opportunity in the 2017 high to take profits. And then we had a market crash of more than 50%, and I failed to realize my profits, and I'll explain why. So let's go right ahead. So there's something called the Fear and Greed Index. So if you have a look at the Fear and Greed Index, it generally measures the public sentiment. And if we have a look here, the Fear and Greed Index is at extreme greed, sitting at 90% on that meter. And then on the opposing side, we have the Fear and Greed Index meter sitting at extreme fear around 13%. So, what does that mean? The sentiment in the extreme greed, it's where the public or retail investors have a fear of missing out. So, the market is in absolute, if you have a look at the highest level, at euphoria, where people are wanting to climb into the market because they feel they will miss out. And the opposing side, extreme fear in the market, is where people are very fearful, and that is where the market is at the bottom. So it's where there's dismay, discouragement, where people think the market has bottomed out. So there's extreme fear. And generally, the human psyche is such that when the market is at the bottom, the general public or most people do not want to buy in that zone. Yet they want to buy on a high, which is not very logical because if you follow the fear and greed cycle, you can have a look. So the market starts off very optimistic as we get price appreciation. Then we get enthusiasm, we get exuberance and euphoria, where the market is at its highest possible level. And then what happens? The market tops out and we get doubters where the market starts to fall. We get anxiety, denial, and then people have a fear where they feel the market's going to crash, and then they start to sell, and that's when we get a collapse there, and the cycle repeats. So, what are the learnings that we need to take from here? Let's have a look. Where in most instances, we need to have a ladder system of taking profit, where we dollar cost average out of the markets, like we dollar cost average into the market when we wanted to enter the market on some of the previous videos that I explained in the modules on getting into the market. So basically, you can see it's a stepping system like the fear and greed index or the cycles. We need to take that information into account, and we can see when there's extreme greed in the market, we can expect the market to top out at some stage. So it's very hard to judge when the top is, but as you see quite maximum steep price appreciation, you know at some time the market's always going to go on up and down. You're not going to get a straight line up. So you know the market's going to top out at some point, but it's very hard to judge where exactly it'll top out. So you might not hit the extreme top, but you might meet 80% of the top. And you might still miss out on the last 20% profit. But it's better than missing the top, and then when we're sitting right at the bottom, down where the market's lost more than 60% of its gains and you're trying to sell to the lower end. So my suggestion would be to have, so firstly, I we need to look at our different portfolios. So I would not use my hodl portfolio to take profits. That's primarily to keep and hold for the long term. So I'm not going to be taking short-term profits on my hodl portfolio. So I'm looking at my trading portfolio or my small cap coins that I'm going to be looking at to take. So if my small cap coins have done a 100% or have doubled in value or tripled in value, I might want to start using this ladder system to start taking profits at the different levels. So let's have a look at an example. So this is actually on Delta as an example where I say what happens is if we don't click the sell button, then our profits are not realized. It's a paper profit or a digital profit in our wallet rather than a realized profit into our bank account that we can cash out. So if we look at this two scenarios here, this is my Delta wallet a few months apart. So if you have a look, the amount of coins held, just Ethereum, was 0.155, and the amount of Bitcoin held was 0.01. And at this time, I was in profit for Ethereum of 457%, and for Bitcoin at 109%. So I did not take any profits. And therein lies the true value of learning, because the market fell. And if you have a look, I still have the same amount of Ethereum, 0.155, and same amount of Bitcoin, 0.01. And I am in South Africa, so my portfolio fell from 17,000 Rand to 10,000 Rand. So from a total profit of 210% to 81%. So at this point, I was very euphoric, etc. And I was happy that I made a huge gain. But the crux of the matter, technically, I did not make a gain. It was a digital gain. It was in my wallet. I did not press the sell button and I did not realize these gains. So when the market crashed, I don't I didn't cash out on that benefit. I lost the opportunity from 210% profit to 81% profit. So I'm not saying that we've got to sell everything, but we need to stagger out slowly and take profits. Otherwise, we will be left in the end through greed with nothing or without realizing much profit. So I hope that was helpful and we learn to take profit, because that's the whole point in being here, is to take profit and make money. So thank you very much. I hope that was helpful.